Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and personal finance. On today's video, I'm going to show you some signs of capitulation, what to look for to identify a potential bottom in this stock market crash. And we haven't seen any signs of capitulation, in my personal opinion, but we're going to keep our eyes on it. And also, if you're interested in where I think the bottom might be, some other stock market investing tips and tricks, and some of the things that I've uploaded all regarding the stock market, then definitely consider hitting that subscribe button, ringing that bell, and smashing that like button. And take a look at some of the playlists we have, because there are some things that are very important to understand on where we could potentially be heading. A lot of people are making the mistake of, oh, the stock market is down 20, 25%. Depends on what index you're looking at. And if you're looking at some individual stocks, it might be down 70, 80%. Just because it's down that much doesn't mean it's a good buy. There are metrics that we need to follow. There are things happening that never happened before. So we're looking for signs of capitulation before we're going to call any bottom. Now, before we get started, some housekeeping. Webull right now has a limited time offer where if you sign up and deposit 100 US dollars, you will get 6 free stocks valued up to $12,600. Webull charges $0 in commissions in stocks and options. You start trading at 4 a.m. and you can end trading at 8 p.m. And there are over-the-counter stocks, and you can also trade crypto on Webull. It's a great brokerage, and you can use it on your mobile device or your PC or Mac. In addition, this channel does have a private Discord server. You get access through the Patreon. Links are provided down below. It is on there where I post all of my trades, and other members post their trades in a member activity dedicated channel on that Discord server. So let's go over the first sign of capitulation, ones that we have not seen yet. And this is the VIX, the volatility index, the CBOE volatility index. The VIX is a real-time index that represents the market expectations for the relative strength of near-term price changes of the S&P 500. Because it's derived from the price of SPX index options with near-term expiration dates, it generates a 30-day forward projection of volatility. Basically, taking a look at the options on the S&P 500 and the implied volatility of those options in the near term will give us an idea of what people are expecting. When there's a lot of implied volatility in those short-term options, then that means that the VIX is going to be high because there's a good chance you're going to see a lot of volatility. When you start to see the VIX at very high levels, that also corresponds to that there is a lot of fear in the market. And when fear is at its all-time high and everyone is negative on something and people think that the stock market is going to come crumbling down, that's actually a sign of capitulation, because that might be the worst of it. And once you get that out of the way, you can start rebounding higher. Now, since the 1990s, the VIX, a level of 37 on the VIX, has been a strong correlation to market bottoms. However, I will add a caveat to that. The recent market conditions that we've experienced is a market with higher implied volatility. More and more people are in options, and it's almost normal to see a VIX trading around 20 to 30. That kind of seems the range of this market. So I think we even need a higher VIX to give us some sign of capitulation. I think we need something that's above 40 to give us a sign of capitulation. Now, during the pandemic, the start of the pandemic, the VIX shot up to crazy levels. That also corresponded to the market bottom in the pandemic, but you can also thank the Fed for that, because they printed a ton of money and basically saved the market for the short term and then put us in this awful condition that might be even worse if we just let the economy kind of handle things normally during the pandemic. It's during the pandemic where we should have seen a slowdown in growth, where people should have hunkered down and tried to save money. We saw the opposite of that. We saw tremendous growth. We saw people spending like crazy. And now we are starting to see the effects of that, and they're starting to pay the price. Now, here's a chart of the VIX. And as you can see, we have been kind of trading in this range. It's pretty well defined. We don't have any sign of capitulation if we just continue in trend and if we just continue to consolidate in this range. To have some kind of conviction that there is capitulation, we need to see something outside the norm. So we need to see the VIX shoot up above that upper trend line. And that's why I think we need to see a VIX that is going to be higher than 38.94. I think if we see a VIX above 40, that might be a sign of capitulation. Another sign of capitulation is if we can see positive market breadth. This just means that the majority of the market, the majority of stocks are positive. You can see a situation, and we saw this situation happen, where certain stocks in the index, the heavily weighted stocks, were moving higher, but the rest of the market was falling, and the index wasn't really reflective of what was going on in the market. When you start to see all stocks rise, that is a positive sign that we might start to rebound. And we just haven't seen that yet. A metric that we can use is the advanced decline line. And that is an indicator used to show how many stocks are participating in a stock market rally or decline. And if you take a look at this chart, it is clear that we're at low levels. We haven't seen the entire market start to rebound just yet. Until we get those signs, it's not clear that we're actually going to rebound. So having that positive market breadth is very important in my personal opinion, because during a market rebound, or when we actually see a bottom, we are going to see advancements in most stocks. Now, to build off of that AD line, the advanced decline line, we can use that line to try to find a divergence. A divergence is a sign of a potential reversal. So if we see higher highs or higher lows in that AD line, that is positive. That's a good sign. That is a sign that more companies are participating in the rebound. But if we see the index fall lower, that means some of the heavier companies are starting to fall. Those companies are usually the last companies to break, and they're going to have the largest weight in the index and the biggest impact to price. So if you start to see those mega cap companies, those companies that are so strong, everybody knows, the biggest companies in America and in the world, if they're starting to fall while the rest of the market kind of already did its thing and is starting to rebound, that is a sign that the last cards of the house are starting to fall. That corresponds to the AD line being positive or moving upwards while the index is moving down. And that is a sign that the market is about to bottom and we have some level of capitulation. Another thing that we can look at is the CBOE put to call ratio. This is basically looking to see if people are so bearish and there are so many more puts than there are calls in the options market. Usually when everybody is extremely bearish, that is a sign of capitulation. That is the last straw. I quit. I'm out. I'm going to go short everything. And that is when you actually start to see the market rebound. Now, if we take a look at this chart, the other levels of market bottom happen when we have a put to call ratio above 1.2. We're not at that level yet, but we are moving closer and closer to it. So maybe we get some sign of capitulation in the near term. Some other things that we can use to our advantage, some technical indicators, include key levels of support. We can use above average volume up days. We can use the RSI to tell us if stocks are oversold. We can look for divergence on the RSI as well. The same principle as that AD line divergence, where we see the stock fall to lower lows, but we start to see the RSI indicate that it's not so much oversold. That is a divergence and a potential sign of a reversal. And we can look for follow through and confirmation of breakouts. So we want to see stocks move to higher highs and higher lows. We want to see that the bottom is in and we are continuing upwards. We are following a trend that is showing us higher highs and higher lows, and that is a sign of a potential reversal. At the end of the day, nobody is smart enough to determine or pick the bottom in stocks. But in my personal opinion, using these technical indicators and these signals are great signals to determine when is a good time to dollar cost average and enter into the market with a decent sized chunk. Not knowing that it is the bottom, but it could be the bottom. That is the best way to look at these signals. They help guide us to get into strong trades, and they also help us determine when is it time to add to our investments. Or at least that is how I use these signs of capitulation. You also want to use these signals with other things such as valuation metrics. Valuation is kind of tricky because the current valuation might be much different than the future valuation. Because if earnings are dropping the way they are, then valuations can change in a heartbeat. So there is just so much to understand with the market. But if you spend your time and you just focus on a few things, the rest will come together and it will be easy or easier to invest and trade in the stock market. So that pretty much wraps it up for this video. I thank you so much for your time. If you like this video, please consider hitting that subscribe button, ringing that bell, and smashing that like button. In addition, please consider joining the private Discord server. A link to the Patreon is down below in the video description. If you sign up with Webull, deposit $100, you'll get 6 free stocks valued up to $1,200, $600 using the link down below in the video description. That wraps it up. I thank you so much for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.